Welcome back to markets. Today it was a dreary day in the markets with the benchmark indices losing 2.5% and the mid-caps doing just a little better, losing 1.6%. The breadth of the market was bad. 5 stocks fell for 1 stock that rose, which means 80% of the market ended lower than where they finished yesterday. The markets, the Sensex losing about 650 points, has shaved off 2/3 of what it gained in that big rally, including Friday and Monday. So, somber day. It's good to get you some more advice. Prabodh Agarwal, President and Head of Research at IIFL Institutional Equities, spoke to us, and here's his take on the spate of underperformance in the markets.
Markets are volatile because of a bunching of several negative news, both domestic as well as extraneous. And therefore, I believe the markets could remain volatile in the near term. On the domestic side, basically the negative factors being that the fourth quarter earnings season has been a disappointment. Almost, 1 out of 2 companies that are reporting below expected numbers. So we are continuously downgrading our numbers. That also creates a lot of uncertainty for FY16 outlook. And while the consensus is forecasting a healthy 17-18% growth in earnings for FY16, there are not many believers for that number. While the flows can create short-term volatility, but fundamentally, if I look at what will be driving the market over the next 6 months, 12 months, or 2 years, would be the underlying earnings. I am still of the view that despite FY15 being the worst year in terms of corporate profits in the last 10 years, in terms of PAT growth, in terms of revenue growth, EBITDA margin, PAT margin, everything seems to be the worst in FY15 in the last 10 years. But I believe, I still maintain that the forecast of 18-19% earning growth in FY16 is not completely outlandish.
Okay, all right, that's the view on the markets. Let's move on. A number of stocks were buzzing around in trade today. Let's go across to Mangalam Malu, who's got a wrap for us of everything that was buzzing around.
Thanks a lot for that. Indeed, a lot of stocks were buzzing down today. In fact, all the commodity stocks were under pressure. Tata Steel, Vedanta, Ken India, all 3 of them down between 5 to 6%. But 2 stocks did buck the trend. Gujarat Gas was up about 8%, while International Paper was also up about 11%. Remember, both these stocks are up nearly 18 to 19% over the last 2 trading sessions. Finolex Cables, though, on the other hand, was down 9% in trade today after it reported its 4th quarter numbers. Towards the end of trading session, they came out with a profit after tax of 47 crores versus 69 crores year on year, and this is despite having a one-time income of 22.5 crores. They had a weak set of numbers, and ahead of earnings that would come today, Pantaloons Fashion and Retail was down about 6% as well, and VRL Logistics and Ashoka Buildcon, both of them down anywhere between 6 to 7% in trade today. They report their numbers tomorrow. With that, back to you.
Thanks a lot for that neat wrap, Mangalam. And now, what to buy, what to sell, and what are the big brokerages telling you about what to buy and sell? Reema Tendulkar is here with that list. Reema.
Thanks so much for that. So the first one I've picked is Macquarie on Bank of Baroda. They say that they would sell into the rally that we saw yesterday. They've cut the target price to 135. They've also lowered the EPS estimates by 12 to 13%. They said that the asset quality stress was high, even though it was slightly better than what the market was expecting. And had it not been for the write-offs and the employee, costs, the profits would have actually been lower. CLSA is written on Adani Power. They maintain a sell rating. The target price stands at 34. They said that there were many one-offs which pushed the bottom line, but actually FY15 turned out to be a weak one for the company. A weak merchant market rates, high leverage as well as regulatory risk hit the company in FY15. And finally, Credit Suisse